Hey traders, this is Christian from Hertz Tribeca Trade Group with your video on our jobs day setups and some of the ramifications after we've gotten the jobs report, and also our kickoff special, what we're doing for the month of September after Labor Day. So a couple things here. So, what did Fed Fund futures do after the jobs number? The jobs data that came in on Friday was, a little bit under expectations, and we talked about this, and I'm going to get into the trades that we took just to kind of give you an example of how we reason through our trade ideas and go through a scenario analysis and why we pick the trades that we do. So let's talk about what happened on Friday. So change in non-farm payrolls came in less than expectations, 150 versus 180, and change in private payrolls came in a little bit less than expectations, further less than expectations there, 126 versus 180,000. So that's a miss. So we had talked about this in the Tribeca Trade Group trading room on Thursday and said, what are the outcomes going to be here? What's going to happen if we get a positive jobs report? What's going to happen if we get a weaker than expected jobs report? So the first thing that we talked about was a positive jobs report, right? What's going to happen there? The purest form is the dollar goes up, bonds will sell off, and equities could be weak because there could be a rate hike that's coming on the horizon. We walked through the scenario just to the opposite if the number came in a little bit weaker than expectations. So, which is basically what we got on Friday. But we talked about the dollar selling off. We talked about bonds perhaps rallying a bit on that. And we talked about what would happen in the metals. We talked about gold. So if the dollar, if we got that negative report or that less than expected jobs report, we expected the dollar to go down and we expected gold to rally in that situation. So we kind of coupled that with the unusual option activity that we saw. We're always looking to see how the street is positioning themselves. So we're taking our own ideas and our own scenario analysis, and we're coupling that with how the street is positioning themselves. So what did we see on Thursday? This was 9/1. We saw a lot of positioning in long gold, something that we really haven't seen. Gold is sold off the last month, but we saw some buyers come into the market ahead of that jobs report. We saw the weeklies being bought. We saw the 9-125 calls. We also saw a longer dated play all the way out to March 145. Again, this was all before the jobs report. We also saw silver positioning, something again we haven't seen for weeks. And then right before the bell, maybe a half hour before the bell, we also saw some XME calls. What is the XME ETF? It's metals and mining. A lot of gold miners, a lot of steel names, things again that will benefit from a weaker dollar. So we took we kind of figured out how the street was positioning for this. We talked about a scenario analysis. We also kind of put in mind that the jobs report that comes in the fall is often one of the weakest times for job numbers. So we kind of positioned ourselves thinking that the number might be coming in less than expectations. So what did we do? We bought, and this is typically, I'm not one for trading a ton of weekly options, but I use the weekly options for trades that can possibly make a big bang quickly, something where you're not investing a lot of money but can really pop if you pick the right market direction. So a couple of things that we did here. We bought the gold miners ETF. We bought GDX that expires just on the day of the jobs data on the 2nd. We bought the 27 calls for 15 cents, and also bought the XME calls, which is basically what this one we went verbatim for what the traders went for, and I bought the 26 calls for 22 cents. So what happened on Friday? We did get that weaker jobs report. Just went over. We got the change in non-farm payrolls came in 150. The private payrolls came in 126. So the initial reaction was the dollar went down, and gold went up. So we were able to take profits quickly. I have a different chart up here, which I'm going to come back to, but you could see what happened with gold. Up and away. It actually took out a couple of these VPOCs and kind of stayed higher. GDX, so GDX was a great trade. So we were able to take this trade off. We entered it for just 15 cents, 1.5, and we took this trade off for 45 cents. So that's a triple in just one day. Same thing with the XME. XME went the right way as well. Got in for 22 cents, took an exit for at 68 cents. So better than a triple on that. So that's how we like to position ourselves in the Tribeca trade room. We like to talk about theory. We like to talk about a scenario analysis, especially around when there's economics that are coming out or there's a Fed meeting. We like to talk about what's going to do well, what's not going to do well in a scenario analysis, and then place our trades. Something where we're not going to commit a lot of capital, something where we're going to get in for a cheap price, but something that could really pop if it goes your way. So that works very well for GDX and XME. Another thing that I noticed, and how I'm kind of positioning, I always like to do these videos, not only, hey, these are the trades that were winners, but this is how we're positioning ourselves going forward. So one thing that puzzled me was the move in REITs and the move in utilities on Friday. Big move down in bonds. It is what it is. Bonds have been weak. And you could see they were down, the long bond futures were down 66 basis points. You could see this on the daily chart, and you could see that we've kind of been leaning lower here. We've got a lot of indecision here, so we don't know exactly which way we're going to go. We're now closing below value, which is what we did last Friday. We'll see if we get any more downside move here. If that's the case, if bonds start to sell off and yields go higher, I still like positioning myself in, placing shorts in some of those hiding places that have been for the first half of the year. Your REITs, your utilities, some of those dividend yield plays, I think are going to be a little bit unwound. We saw that with the SPLV ETF this week. We saw a lot of money coming out of that. We saw some big sell orders in some of those low volatilities, those defensive areas of the market. So one thing that I noticed, another trade that we made money on Friday was, if you look at the Reit ETF, this thing spiked up, and it didn't make a lot of sense to me considering yields were going higher. Bonds were selling off on Friday. So, I used our technicals. I used this VPOC, Virgin Point of Control. Once sometimes we hit these, sometimes we gravitate to these levels. Once we take them out, we revert. So I bought the October. This was a position that I already had on, but I added to the IYR REITs October 80 puts. So I went short here at 85 cents, and I was able to take off two targets at $1 and $1.15. So I am still short REITs. I still think we could have some downside in this particular group, especially if those bonds break down. So that's what I'm looking at going forward. And then on the flip side, we did see some positioning on Friday. We saw a pretty large order in the KBWB ETF. A lot of people have never heard of this ETF. What is it? KBWB? It's banks. It's money center banks. It is actually, it's the bigger banks. So there's three banking ETFs that I look at: KRE, which is regional banks; KBE, which is all banks; and KBWB, which is your largest banks, your Bank of America, your Citigroup, your Morgan Stanley, your JP Morgan. So these are in this KBW ETF. And you could see there's about 1.3 million shares that were bought, and that was at 11 o'clock yesterday. So I think there's still money being allocated, and I think it's fresh. This is new. This has been going on just for a couple weeks here, where we've seen some inflows going into financials. You could see for the week in ETF fund flows, something that I track every day, you could see that it caught the most inflows of any sector for the week. $600 million in inflows. Next was materials. So we also saw that buying in gold miners as well. But financials led here. And it also encourages me to see that banks were also bought after the jobs data. So not just previous, which we saw on Monday and Tuesday, but also on Friday. So that's what I'm looking at going forward. I'm going long banks from a technical aspect. You could look at KBE, and you could look at this on the weekly chart. Now firmly into the value area. And we're going to exercise the 80% rule using value areas. Normally, once you're firmly in the value area, there's an 80% chance that you could go from the bottom of value to all the way to the top. Not always in a straight line, but eventually it will get there. So I do like, for KBE, I'm looking at the Januaries and I'm looking at the Decembers. If you choose to do December, I like the KBE December 34 calls. So those are marking right at $1.50. I think that makes a good trade. You could also turn that into a limited risk reversal and sell a put spread against that. So that's what I'm looking at going forward. Short REITs and long banks here. And the special that we're running right now is the Kickoff Special. So couple of things that I love about September, definitely football starting, fall is starting. It's going to get a little cooler outside, and trading is going to pick up after Labor Day. So it's a great time to check out the Tribeca Trade Group. Get ready, start to trade, start to make money for the rest of the year. We just got a few months left here, but September should be a very interesting month. So 1 month of the live trading room, 50% off. Why do I do this type of special? Because I want you guys to give it a try. I think that you're really going to like it. So a lot of times I kind of give this away for a very cheap price because, I want you to check it out and I want to see that you guys are making money by doing so. So just a little bit of description about how the trading room works. We open it at 8:45 in the morning, and we talk about for 45 minutes pre-market analysis and technical analysis every day. We put levels up for the S&P. We do this for the FANG stocks as well, and we do this for other stocks that are going to be on our watch list for that day. You also get a daily trading plan that kind of gives you a look at what names were upgraded, what names were downgraded, all the news that you need to get ready for the trading day. The trading room hours 9:30 in the morning till 4 o'clock. But again, we open up the trading room earlier than that. We open up at 8:45, and at 12 o'clock, once the action kind of dies down a bit, we kind of go over a little bit of a review for the day. What are the lessons of the day? What are the themes of the day? Where you want to position your money? You get real-time trade alerts that's included with the room. And you also get an end-of-day trade summary with the best option signals and an open positions sheet. So you get to see it at all times what my open positions are. You see these in the trading room. If you're not in the trading room for whatever reason, you get an end-of-day summary that has that in there. The end-of-the-day trading summary looks a little bit like this. This was Friday's end of trade day. We talked about we made some money with GDX, XME. Also took off a lot of profits. Here was our IYR trade. We also added to our IBB trade, and just a lot of profits. We also went long silver too, so we took that trade off on Friday as well. So what else? You also get if you're kind of a part-time trader, can't be in the trading room, throughout the day, we have an ETF swing trade program, which you can also be a part of for no additional cost. We also do earnings trading setups, earnings trade setups. We really hit a couple home runs last week. We went short Lulu. We went short Salesforce.com. So another thing in the room, we don't always go long. We kind of trade what the market gives us. So we trade puts and we trade calls. I see a lot of guys on Twitter and a lot of people, you want to be able to trade like a hedge fund. So hedge funds don't always just go long the market. It's great when the market goes up, but you want to be able to capitalize when the market goes down or when you think that there's also going to be some short setups. So, a couple home runs in taking a Lulu short and taking Salesforce.com as well short. We also did Palo Alto as well. For huge profits as well. Luckily, we got out of that one quickly because it reverted. And then also, finally, we do free webinars. Full disclosure, we give one about every 2 weeks. I don't do 5 webinars a week. We talk all day long. We give so much analysis and so much setup daily that we don't need to be going, giving 4 webinars a week. So we do one every 2 weeks. Here's the coupon code to get 50% off. TTGLD, Labor Day. So that is our coupon code. Please take advantage of this special for the month. You want to really get involved here. Now that vacation is over for most traders, you can go to tribecatradegroup.com/products right up here, and you can do our senior trading desk monthly package. Go ahead, sign up now, and you can put in that coupon code to get 50% off for the first month. That's it. Enjoy your weekend. Enjoy some football on Labor Day weekend. Have a great weekend, everybody.